In accounting, there are two methods that businesses use, either cash or accrual basis. What's the difference? Which one should you use? Well, that depends. Let's look at these two options more closely, starting with how expenses are handled. With cash basis, when money is spent, it's recorded on the day it actually happens. For example, if a business purchased ink cartridges for $375 on May 5th, that is the date that the purchase is recorded, May 5th. With accrual basis, expenses are recognized when they are incurred, not when they are paid. Let's say that the business received the ink cartridges on April 20th, and they paid for them the following month on May 5th. Using the accrual basis, this expense will be recorded on April 20th because that's when it was incurred, regardless of when the bill was paid. Let's head over to QuickBooks Online to record this as a journal entry. On April 20th, we're using accounts payable to record the liability, and that's for $375. That's due to the vendor of the ink cartridges, which is Office Depot. By crediting this account, we're increasing it by $375 and reporting the purchase under printing supplies. By debiting this expense account, we're increasing it by $375. On May 5th, we're paying the vendor Office Depot, so we're debiting accounts payable $375. This zeroes out the account because we're paying the bill and no longer owe Office Depot. We're paying the vendor using the Chase checking account. Crediting the checking account means that we're reducing the bank balance by $375. Now let's take a look at the differences between the cash and accrual basis from the revenue side. With cash basis, revenue is recorded when it is actually received. The business delivered the promotional flyers for a boba tea shop on May 9th. On June 3rd, the business was paid $1,500 for their services. Using the cash basis, the income would be recorded on June 3rd when payment was actually received. This is the case even though the services were provided during the previous month. With accrual basis, revenue is recognized when it is earned, regardless of when it is actually received. So using the same example, the revenue is recorded on May 9th when the promotional flyers were delivered to the business, not on June 3rd when payment was received. What does this look like as a journal entry? On May 9th, in accounts receivable, we're recording the amount of $1,500, which is the amount that we are owed by our customer, boba tea. Debiting this asset account increases it by $1,500. We're recording the income to our services account on the day that it was recognized. Crediting our services income account increases it by $1,500. On June 3rd, we are zeroing out accounts receivable because we received $1,500 from the customer, boba tea. Crediting accounts receivable reduces it by $1,500. The payment is deposited in the Chase checking account. Debiting this asset account increases it by $1,500. Now we come to the final question of the day. Which accounting method should you choose? The cash basis is simpler and more straightforward. Money is recorded when it comes in, and it's recorded again when it goes out. This is great for small businesses. The accrual basis may be required for businesses that are larger and more complex. It provides a more accurate picture of a business's revenue and expenses during a period of time. However, there are a lot more details to track. Thanks for tuning in today. Drop a comment below. I love interacting with other people on their bookkeeping journey.